So earlier this week, Johann A. Benckiser, or the JAB Group, made its third coffee acquisition of the year in their over $300 million purchase of Caribou Coffee of the United States. This comes on the heels of their almost $1 billion purchase of Peet's Coffee about 5 months ago, and their 12% and now 15% stake in DE Master Blenders in Europe. There's a lot of speculation out in the market that the JAB Group is looking to sort of consolidate or become a big player in the coffee industry. The fact of the matter is that, and JAB has gone on record in saying this, is the motivations behind these acquisitions are their continued interest in purchasing and acquiring stakes in premium brands in high growth categories. And these three purchases are exactly fall in line with that. First, with DE Master Blenders, with their Douai Egberts brand, along with their Cerista machines, represent a change in coffee culture in Europe, where we've seen the growth of the single-serve coffee pod and fresh beans as opposed to ground coffee. DE Master Blenders is coming onto a scene where Nespresso has already lost, or is in the process of having to defend many of its patents, whereby the Master Blenders is primed to both create capsules and pods for the Nespresso line of machines, as well as their own pods, which are high growth areas for coffee in Europe. In the case of the two American companies that JAB has purchased, mainly Caribou and Peet, these companies aren't necessarily threats to specialist coffee chain Starbucks, but in their own right represent high growth opportunities and premium opportunities for coffee drinkers in the US. Both Peet's and Caribou have a very loyal, albeit niche market. Peet's is very popular out on the West Coast in California, Washington, Oregon, as well as having some stores in the Midwest in Illinois and Massachusetts. And Caribou has many chains in the Midwest and also the Southeast region of the US. But the acquisitions, while they look like it's an attempt to maybe play in the field of on-trade or food service coffee, the reality is both Caribou and Peet's represent a growing trend of American consumers purchasing packaged coffee that they would normally buy at retail outlets in their grocery stores. The success of Starbucks coffee, Dunkin' Donuts coffee, and Caribou and Peet's represent the shift away from maybe normal grocery brands, such as an economy brand like Maxwell House or Folgers. So the acquisition of JAB is really just a play into areas where there is high growth in an already premium segment, and really makes sense in terms of the company's strategy in their mergers and acquisitions.